Discover the stocks company executives are scooping up. Explore three companies where executive purchases and insider buying demonstrate confidence and strategic foresight. Sol Centers, a recent stock purchase by key executives, point to a potentially bright future for the company. Enphase Energy, with increasing adoption of solar energy, the leading manufacturer of solar energy microinverters, is likely to benefit. Orion Group Holdings, specialty construction company, could potentially gain the advantage from long-term infrastructure projects. Let's dive in. Here are the three stock CEOs are buying heading into May 2024. Welcome to Timely Investment Research. Insider buying stocks are shares purchased by executives within a company. And on Wall Street, this often spotlights undervalued assets and signals future potential. Also, it underscores strong confidence upper management may have in the strategic direction of the business. As a result, investors keen on uncovering the next major opportunities keep a close eye on when chief executives and other company insiders publicly buy shares in their own companies. Notable academic research suggests when insiders are buying, it can signal sunny days ahead for a given stock and even for the broader market. On the other hand, selling shares in one's own company often means a storm is brewing. Hence, insider buying stocks could be one of the tools for investors with long-term vision. Heading into May, three stocks that have recently drawn significant investments from their leaders highlight a bullish outlook. Number 1. Sol Centers, a real estate investment trust. Sol Centers specializes in mixed-use shopping centers. Sol Centers' portfolio includes over 60 properties, primarily in the northeastern U.S. Recent economic challenges haven't stopped Sol Centers from achieving strong financial growth in 2023. The REIT recorded a 7% increase in fourth quarter revenue year over year, totaling $66.7 million. Additionally, net income climbed almost 14% to $17.5 million, compared to $15.4 million in the prior year quarter. This growth was primarily driven by higher termination fees and base rents, despite elevated costs. Also, Sol Centers is strategically focusing on grocery-anchored shopping centers. As a result, the REIT enjoys a relatively stable and predictable income stream, making it an attractive option for income-seeking investors. The confidence in the company's trajectory was further underscored by recent insider purchases. In March, Chief Executive Officer B. Francis Saul A. and President Chief Operating Officer David Todd Pearson significantly increased their holdings in Sol Centers. As a result, corporate insider ownership has increased. Yet, despite positive indicators, Sol Centers stock has underperformed the broader market, declining around 10% year-to-date. Nevertheless, the company still offers a robust 6.5% dividend yield. Also, analysts remain optimistic, setting a 12-month price target of $43.50 for the stock, suggesting a 22% upside potential from current levels. Number 2. Enphase Energy. Next up on our list of insider buying stocks is Enphase Energy. As a leading provider of microinverters, the company sits at the heart of a rapidly growing solar energy industry. These microinverters work with solar panels to convert DC power into AC power, making it easier for homeowners to generate their own electricity. Recent data suggests that by 2032, the solar power market worldwide is likely to exceed $435 billion, with a compound annual growth rate of nearly 6%. Despite the sunny outlook, its most recent earnings report reveals a sharp decline in quarterly revenue, falling to $302.6 million from $724.6 million year over year. Rising interest rates impacted residential solar installations and thus revenues. Also, adjusted net income decreased significantly from $212.4 million to $73.5 million. Yet Enphase Energy CEO Badri Kothandaraman expresses optimism, stating that he sees falling interest rates and rising utility costs as additional tailwinds. In late February, Kothandaraman increased his stake, acquiring 4,000 shares of the company, signaling strong confidence in its prospects. So far in 2024, Enphase Energy shares have declined around 18%. Yet Wall Street has a 12-month price target of $134 on Enphase Energy, implying about a 23% upside from current levels. Finally, the company's price-to-earnings ratio is around 32x, which is lower than its historical average. Any further declines in the share price may provide an opportunity for long-term investors interested in a high-growth stock like Enphase Energy. Number 3. Orion Group Holdings. The final pick among top CEO stocks is Orion Group Holdings, a silent force in the construction industry. With a focus on marine and specialty construction, Orion Group Holdings plays a crucial role within infrastructure projects. In late February, the company reported a fourth quarter revenue increase of 2.8% year over year, reaching $201.6 million. The growth was due to gains in marine projects like Pearl Harbor's dry dock, despite a decline in concrete revenues from winding down operations in Central Texas. Net loss narrowed to $4.4 million from $4.9 million. Orion's management remains optimistic, forecasting stronger performances in 2024 and 2025, supported by a solid project backlog and favorable market conditions. Recent key strategic moves have included a disciplined bidding strategy, executive hires, and securement of a $103 million credit facility. All of this positions Orion well for future growth. In a recent show of confidence, two Orion Group Holdings executives, CEO Travis Boone and General Counsel Chip Earl, added to their Orion holdings. The recent purchase increased Mr. Boone's overall Orion Group Holdings stake to 402,557 shares. Impressively, shares have surged almost 63% year to date. The stock trades at 34 times forward earnings and 0.40 times sales. Finally, analysts have a $10 price target on Orion Group Holdings, implying a 24% upside from current levels. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please leave us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.